Welcome to the WealthStack Podcast. I'm your host, Shannon Rosic, the Director of WealthStack Content and Solutions. And today, I'm joined by Saira Rahman, VP of New Investor Initiatives at Fundrise. And we're diving into one of the most exciting shifts in wealth management, how RIAs can harness the power of alternative investments to unlock new growth and resilience in their portfolios. So Saira, thank you so much for coming on the show. Welcome.
Thank you so much for having me. I'm so excited to be here.
Awesome. So I always start with the hardest question first. And it is the hardest question. You'll get this whole conversation because, you have a really impressive track record when it comes to alternative investments. And so, I'm curious about what led you into this space, what excites you about the future of alternatives, and ultimately, give us a little background, both personally and professionally. What makes Saira, well, Saira?
Thank you. That's so kind of you. I feel like what led me into alternatives was this idea when I was younger surrounding this inequality of knowledge. And it was really between my family and what I thought was the rest of the United States of America. So we came here as immigrants and my parents didn't know anything about finance, didn't know anything about banks, none of that stuff. So the thing that they were taught when they arrived was, debt is evil and people in finance are generally evil. So, and to this day, my dad is always like, did you pay down your mortgage? And so I spent all of my childhood with that belief that debt was evil. And I actually ended up going to a university where I had the biggest scholarship rather than going to an Ivy League that I actually got into. And that kind of spiraled into, I worked in debt capital markets. I spent a very long time selling interest rate derivatives. And then that eventually shifted into working for one of my clients, a local community bank that eventually I got poached from there into working at a fintech, and then eventually in private investments at Fundrise. And really the common thread within all of that was how can I provide financial literacy to people that don't have it? And that was really kind of the crux of my entire career, is me perpetually educating people, whether it was something as complex as an interest rate derivative, or to me as simple as how do you get yourself involved in private investment?
Well, I always find it very interesting if there's a specific moment in time or event that kind of shaped your thoughts around, your now career and how you got into this. So I have to ask then, is debt still evil then?
Oh my gosh, no. So there's been this shift in dynamic in my family where they're starting to trust me more than they used to. Mostly because my dad at one point was telling people I was a financial advisor and my mom was telling people I was an accountant.
And you're like, none of the above?
Yeah, exactly. I was like, let's sit down and talk about what an interest rate swap is. Let's sit down and talk about, what investing in real estate means. And now my parents are huge advocates of real estate investment. They love venture capital. They love Fundrise. They love the idea of Fundrise. So that's something in my 30 plus years that's definitely changed since my parents immigrated here.
Well, I'm impressed that they understand what you do because mine still don't. I'm still working on the elevator pitch to get them to understand. They're like, yeah, you do the videos on the internet thing. And I'm like, yeah, that's fine. That's close enough. So pretty amazing that your parents went all in and, took the time to actually understand that you're not an advisor or CPA. But I do want to talk about Fundrise here for a second because Fundrise is really at the forefront of making institutional grade alternatives more accessible. So can you just give a high level overview of Fundrise, its mission and how you're ultimately working with RIAs?
Yeah, absolutely. So Fundrise is a platform where anyone can come invest in private markets. We currently offer best in class funds for real estate, private credit, and most recently venture capital. The whole premise from our founders back in 2012, they really saw this wave that would be coming in the future of this desire for people wanting to be able to invest like the ultra wealthy. A lot of private markets has historically been gatekept from really even high net worth individuals. It's really typically only been for ultra high net worth individuals. And our founders saw that there was this access point that they could offer with real estate, with venture capital, and with private credit that hadn't been done previously. And we really own the full flywheel. So we're one of the only entities that does everything from seeking out plots of land to building on those plots of land to then taking those properties, wrapping them into a fund, and then offering them direct to our underlying investors. We saw in 2022 that we could easily duplicate that for venture capital. So we took our exact same technology, replicated it for venture capital, and now we seek out investments that are also best in class on the venture capital side, and we crank it through the same machine and offer it direct to our investors. And you can invest for as little as $10 with no accreditation required. As it pertains to RIAs, obviously I'm biased, but I think that we have some of the best offerings within the market because our founders have such a broad and deep history in real estate, and we hired some of the smartest and brightest people out of private equity to help us on the venture capital side.
Oh, that's really fascinating because you hear the word democratization get thrown around a lot in our industry, and especially when it comes to things that are maybe or haven't been as accessible, like investing in real estate or these more complex alternatives, like you mentioned. It's certainly encouraging to hear, that this is now taking place. So I'm curious what the reception has been so far, because again, this is a bit more of a complex space to navigate. So, are you seeing RIAs really taking to this? Is this something that's exciting them, that they're working into their strategies with their clients? Just curious how it's resonating.
Yeah, so as with anything, I think there's an education aspect to it, especially when it comes to something like venture capital, which I think is fairly nascent to RIAs. So real estate, I think, has always been there. There's lots of offerings in the real estate space for obvious reasons, like you could invest in individual deals, or you could invest in REITs, or you can invest in interval funds. But venture specifically, I think, is one that has been expanding rapidly because it's very, very difficult to seek alpha in public markets right now. I think if you're looking especially at like the S&P 500, well, it's kind of only been increasing because of a handful of AI companies.
And heavily weighted on tech. It's mildly concerning.
Yeah, precisely. And it's kind of like, well, let's take a look at what's going on in AI. Well, most of the action in AI is actually happening in private markets. So if you're an RIA and you're seeking alpha for your clients and you're only offering them public markets, you're not actually getting them the alpha that they want. They need to be invested in private markets in order to have the access to those amazing companies that frankly don't want to IPO, or that are IPOing much, much later than historically because it's so difficult to IPO right now.
Yes, it is. And I appreciate that perspective. And thank you just for the background and context. But I want to dive into our first segment that I call Stats All Folks. And I thought this was an interesting statistic and can't wait to get your take on it. But according to Cerulli, reports that alternative investment managers expect 23% of their assets to come from individual clients by 2028 compared to about 13% this last year in 2024. Thought that was interesting and curious, what is kind of driving this shift to go a little deeper on the alternative investment side of things?
I think there's a huge shift that's been happening. I completely agree with you. And that shift really over the last 5 years, you're seeing more and more investors being exposed to alternative investments. Again, what historically used to be an asset class for the ultra wealthy, it's now so much easier to access online. You have Gen Z and millennials who are incredibly tech savvy. They're early adopters. They want to click and buy on their mobile phone. Those people are seeking out those best in class investments, and a lot of them are seeking it out next to their equities. So you're looking at places like SoFi, you're looking at places like Charles Schwab. They offer all of those investments side by side with equities now. And it's just this massive wave that's been coming through, making it so important if you're a tech platform to offer these alternatives at the same rate that you're offering equities. The other thing that I think about that we just kind of talked about is that private companies are staying private for much, much longer than they used to. So having that access to companies like Databricks, OpenAI, Stripe, Anduril, you have to have those access points available. And so if you're an RIA or if you're one of these tech platforms, you have to find ways to offer those companies because those are probably the companies that are going to be asked for the most.
Absolutely. And like you said, we've really seen the public markets become increasingly concentrated, dominated really by those mega cap stocks like Nvidia and Apple. Like, again, mildly concerning that we're putting all of our eggs in the tech basket. I understand it, but it's still scary. And again, you've talked about how AI in private markets now kind of represents that next wave of alpha. So why do RIAs need to seriously consider alternatives as part of their, portfolio strategies this year and even beyond?
If I'm an RIA, I'm looking for real yield. And right now the S&P is not offering much. It's barely moved. And that historic increase over the S&P from what the last 2 years prior to this year, when I think about it, it's concentrated in Nvidia, it's concentrated in Apple. Like there's a handful of stocks that we can list off that it's focused on. And why are those stocks increasing? Because they're in AI. But the vast majority of that alpha sits in AI companies that are private. So if you're not seeking out the right venture fund, if you're not seeking out the right spaces to invest in, and you're not finding the Fundrises of the world, I just highly doubt that you're actually going to provide the alpha over the coming generation, over the next decade even, if you're not investing in earlier stage than public companies.
And advisors, often face barriers when it comes to adopting alternatives, whether it's perceived complexity, liquidity concerns, or even accessibility to it. So how is Fundrise addressing these challenges to make it more practical and accessible for RIAs?
I know the liquidity question comes up a ton whenever RIAs are talking with me, and I understand that gives them some heartburn. And what I'll say is that I think liquidity, or rather, I should say the lack thereof, is a feature, not a bug, when it comes to private market funds. And I say that at Fundrise, we actually offer quarterly liquidity. So there is some liquidity. It's just not as liquid as being able to trade day in, day out. And I think the majority of people who are wise enough to have an RIA, they also are wise enough to take the advice that when you're entering into private markets, you don't want to be moving in and out of them, right? You want that to be a long-term investment. You're not just looking for a quick buck that's going to increase your portfolio over the course of the next month. You're looking for generational wealth. You're looking for wealth preservation by that point in your what I like to call wealth journey. So I think that's part of the conversation that we should be having as entities that are managing a lot of investors at the same time. And then with regards to accessibility, one of the things that I love the most about Fundrise is that we don't just offer to RIAs and high net worth investors. We also offer a minimum as low as $10. So you're able to access our incredible funds without having to invest a ton of your assets.
And you've actually been pretty vocal about the changing demographics of investors with, millennials and Gen Z expecting that seamless tech-driven financial experience. How should folks then be evolving their approach to attract and retain these next-gen investors?
Yeah, I mean, I'm sure you've been talking a ton about the great wealth transfer that's been occurring. And to me, the way that RIAs can stay on top of that, particularly with Gen Z and millennials, is by staying involved on the tech side, right? So it's not just knowing NVIDIA, it's not just knowing Apple. They also know all of these top company names, Databricks, DBT, Anduril, Jetty, I'm trying to think of the other ones, Service Titan that just IPO'd. Those are the names that they're talking about. Those are the names they want to hear about. They want to know that you're in the know as well, and that you understand that those are the future of the S&P 500, right? So in my opinion, it's kind of staying on top of that aspect of it. So understanding what's going on in the venture space, because I think that generation particularly prefers that you are. And then I also think there's this additional layer of actually being online. So some of the most successful RIAs that I've spoken with, they have these incredible LinkedIns. They have these amazing X profiles. They have these unbelievable Instagrams. Those are the ones that I think are the top tier that'll be just vacuuming up all of the Gen Z and millennial future wealth preservers and wealth builders.
Yes, I would have to agree with that. If you don't have some type of robust digital footprint, you're probably already behind because, as a general consumer, how do we all research, what restaurant we want to go to, what hotel we want to go to? We're going online and doing a ton of research before we are even engaging in that conversation. So completely agree that if you're not meeting folks where they are right now, you are already behind the game.
Right.
But I do want to talk about the shift that we're seeing, when it comes to fund distribution, because that is evolving rapidly and firms like Fundrise are truly meeting RIAs on platforms that they already use. Like you mentioned, Schwab and SoFi and others. So curious on your perspective on how this shift and changes the way advisors think about implementing alternatives into client portfolios. Are you seeing that they are more amenable to the process, or is there still kind of some hesitation to it? Because again, a lot of advisors still see alts as a niche or high risk play.
Yeah, I mean, my perspective and from what I've seen is that they're more likely to make suggestions surrounding the alternative space if the investor's already including alts in their portfolio. So I always default to my advisor. He chuckled at me, but I recently purchased, some like random piece of a dinosaur on a platform. And he was like, oh, like you really are into alts. And I was like, okay, so let's talk about what Fundrise is for a second. But there's definitely a little bit more, there's more of an opening, I think, when they start to see that a lot of their underlying investors actually love to be tinkering with. And, there's rare sneaker portfolios you can invest in. There's real estate, obviously, venture capital, private credit, but there's just so many options. And now when they pull up your tax forms off of your investing platforms, when they see that you've like bounced around inside of some interesting asset classes, I think they're more likely to bring it up. I also, in terms of the conversations I've had with RIAs, a lot of them are starting to realize that you need to be looking at that broader portfolio because for me personally, a ton of my money gets thrown at alts separate from what my RIA is managing. So you want to include that anyways inside of the overarching portfolio so that you're going somewhere within that 20 to 50% range. That's historically been the case for, the ultra high net worth investors to make sure that you're tying out in terms of what percentage should actually be allocated.
So I need to rewind for a second. You said investing in part of a dinosaur. I feel like I just need a little more context on this.
There are places you can invest in objects that are supposedly worth a lot of money. And for me, that was like kind of an experiment that my accountant still has a headache over.
It's good for them. They have to be prepared for any situation. So keep them on their toes.
Exactly. I'm sorry. If you're listening to this, I'm sorry. But
shout out to JP then.
Yeah, exactly.
No, and I think it's so interesting too, because it seems like, especially when it comes to alternatives, that a lot of investors are kind of self-motivated or it's a lot of self-learning. And then they're taking that back to their advisor and saying, hey, this aligns with my values or my views, or I'm like you, I kind of just want to maybe experiment in this space. And so it's an interesting dynamic, I feel like, that's happening right now where folks are kind of self-dictating or self-directing kind of the direction they want to take their portfolios. And then the advisor kind of needs to figure out and be able to intelligently speak to that. So, are you seeing any trends there? Am I way off base? But to me, that it just seems like a lot of investors are kind of, it's a self-learning journey with this.
Yeah, absolutely. And I think that I think that's a good thing. Like, you don't want your investors to be like more educated than you. So like that's the only friction there, right? I don't ever want to turn to my advisor and be like, hey, so I'm investing in this asset class, and then they don't know anything about it. So that for sure you don't want to happen. But yeah, absolutely. I mean, some of the stuff I've said to my advisor, he finally was like, the crypto stuff, Saira, you got to slow down. And to that point, I was like, yeah, probably,
So because we are also on a tech podcast, I do want to talk the tech side of things here briefly. So curious, just want to get under the hood a little bit at Fundrise. How is Fundrise utilizing tech to improve the investing experience?
At Fundrise, well before I joined, everything was kind of built as a nascent technology. So our team of engineers put together the entire value chain on the real estate side, and everything was built from the ground up. It's all nascent, and it's every time I learn something new or we try to build something new, I just realize more and more that we actually don't match the normal financial machines outside of Fundrise. So probably the best way to put it is that we have individual flywheels that are custom built to Fundrise that are it's just not duplicable. Like, you couldn't duplicate what we've done because it's more than a decade of unbelievable technology. And it's everything from what you would see on your phone to what you can see on the website, all the way through to what happens in the background with our real estate team that's putting together the funds, or a venture team that's putting together the venture assets.
So what else is on the roadmap then for Fundrise for this year and even beyond? What can folks get excited about?
Yeah, so We have some stuff going on the real estate side that I'm not allowed to talk about. That's incredibly cool. But on the
Teaser.
side that I can't, I wish I could talk about it, but I can't. It was something that I got very excited about, and I can't talk about it. But the really cool thing that I have been working on is the fact that Fundrise is expanding to other platforms. And historically, after having built the machine to be able to go from our internal APIs out to our investors, we've kind of, for the most part, we've figured that part out. So we're shifting gears and moving to being able to offer on other platforms. And that has been kind of magical for me to watch and experience. So...
Oh, I can imagine. All right. Well, so we'll have to do a part 2 at some point so I can flush out the teaser that you just dropped on us. So, but it is actually time for segment 2 of this episode, Saira, which is Ask Us Anything, where I've gone out to the social universe and asked folks to submit questions they want answered by you. And we did have a few folks slide into the DMs this week. So if you're ready for the hot seat, I got some questions for you. All right. First one. With real estate historically being one of the best performing investment assets and a core part of many of the most successful investor portfolios, is this trend still true today?
Yeah. So I think my short answer is yes. It's probably more important now than it has been in the last 15 plus years. Stocks are at all-time highs, like we've already discussed. Valuations are similar to 2000, and real estate relative to all of this is at a low. You want to make sure you're diversified. You want to make sure you're protected against the potential market correction that I think more and more people are starting to believe is on the horizon. And to me, when I talk to the people that are much smarter than me about real estate's currently on sale. And the smart buyers are currently investing in real estate right now.
And it's just funny because you hear so much about the interest rates and, home prices seem to be coming finally out of that bubble. I mean, we bought back in 2019 and it was the absolute Hunger Games out here in Denver to try to get a home. And it was giving me agita when I heard friends that are going 50 to 70,000 over asking. And I'm like, you want to start out in the red, talk about smart investing with real estate. I'm like, oh, that's a hard pill to swallow. So hoping things level out a bit more, because across the country, it just seems like there's, people feel stuck with the interest rates, but even though prices are coming down, is it really moving the needle much,
Yeah, I mean, supply is still historically very low, which is the interesting part. And there are still people willing to buy. LA is obviously a microcosm where I'm located, but I mean, rentals are flying off the market. Housing is at an extreme low. And I personally, when I go out, I've been searching for a house in LA now for probably 2 years, and it's impossible to do. It's not easy to shift from your current, especially if you're trapped in a sub 3% mortgage.
Yes. And that's where we are. So I'm like, we're stuck here, at least for the foreseeable future. I'm like, that 3.1% sounds so great right now. So, well, sending the positive vibes for you on your search. I hope you find the perfect place when it makes sense. One more question for you here that we got. What is maybe one or two things that folks should know about Fundrise, or maybe that there's a misconception that it's, challenging to work with you? What is, one or two things that folks should know that you wish they maybe knew and don't?
Yeah. I mean, I think the main thing is that we are incredibly RA friendly. So we have an incredible IR team led by this amazing woman, Kendall, and they know the RIA space as well as they know Fundrise, and that ability to help educate and then maneuver someone through alts, even if you don't end up at Fundrise, I just can't encourage that more. I think the biggest step and the one thing that RIAs should do is attempt to invest themselves. And I think Fundrise is a great place to try it. But if you've never tried alts before, it's a great way to learn about the space, because that is our whole premise. Our whole premise is let us educate you, let us give you the tools so that you can become the expert that you want to be. So if it's something you've never experimented before, as an RIA, I can't recommend it enough. Just like try it out, reach out to our IR team, reach out to me. We're more than happy to help and like get you over the hump so that you can at least make yourself more comfortable with the idea of alternatives.
Awesome. Well, I appreciate you being put on the spot and your very insightful answers. We are coming up on our final and what might be my favorite segment that I affectionately call Stack It or Whack It. Yes, I do have t-shirts that go along with this because the branding is too good to pass up. So I'm going to throw out a few technologies. Be warned, they're not always necessarily wealth tech related, sometimes just random things I hear within the industry or even outside the industry. And you tell me if they are worth the hype or not. So stack it, you love it, use it, or whack it, hate it, lose it. So first one I have for you, stack or whack direct indexing for private assets. Is that overcomplicating the alternative space, or is that a smart customization tool? Stack or whack?
I think direct indexing is hard to do generally, but it's especially hard with private markets because it's inherently inefficient, and returns are driven so much more by execution than just broad market movements. So just simply buying across a bunch of deals isn't inherently good when it comes to real estate. Generally, getting exposure through a well-diversified, low-fee portfolio, to me, is the move. When I look at the direct indexing, I just think it's kind of silly.
All right. That sounds like a whack it to me then.
Yeah, that's a whack it.
All right. Love it. And last one I have for you, tokenized real estate funds. Is that the next evolution in alts or just a buzzword right now?
I mean, you can do the exact same thing, and it's called an interval fund, which is what we offer at Fundrise. So I'm very whack it on it. And I really think there's a use case for blockchain and real estate. But I don't think that it's this. So
that is fair. All right. We are 2 for 2 on the whack it. So Saira, it's just been an absolute pleasure getting to know you and learning more about Fundrise. Please tell listeners where they can find out more about you and what you're working on.
Absolutely. You can find me online. My handle is always at my full name, Saira Rahman. Always happy to chat directly there. Or if you're looking to test out Fundrise, you can always go to www.fundrise.com/Saira. And that's spelled SAIRA.
Love it. And thank you for that. So be sure to go check her out online, and her Twitter is pretty awesome too. I follow you, and it's a lot of great stuff on there too. So
thank you.
Of course. And be sure to like and subscribe to the WealthStack podcast on all major podcasting platforms, and follow all things WealthStack on wealthmanagement.com, LinkedIn, and Twitter, or X, whatever you still prefer to call it. And if you want the in-person WealthStack experience, join me June 10th through 12th at the Boca Raton Resort in Florida for Wealth Management Edge. Thank you all for tuning in.